All right, everybody. So there's been a lot of news as of late when it comes to DeepSeek AI, and a lot of people have mostly looked to the US technology market to kind of find stocks that have dropped in value because of the news. But today I'm kind of going to go over two Canadian companies that ended up getting hit pretty hard because of this news, which, by the way, is developing so fast. It's changing pretty much every single hour. I mean, just a few days ago, we had DeepSeek AI that came out. They said they could pretty much perform what ChatGPT does with 5% of the energy usage and the overall power. Then we had, the next day that they might have been fabricating it a bit. And now today we have OpenAI alleging that, DeepSeek AI is stealing its data. And that's how it actually ended up training its model. Then we come down here, we have Alibaba releasing an AI model that says it surpasses DeepSeek. There's a lot of questionable elements when we're relying on news out of China, because there is a lot of, I guess you could say, trade tensions between the United States and China. China would ultimately benefit from fabricating this a bit, but overall, this isn't necessarily going to be a stock research video. I'm just going to go over the entire situation, and I'm going to go over two stocks, one being Capital Power and one being Hammond Power Solutions, that took a big hit when it comes to price because of the fears of this DeepSeek making essentially power consumption be much less in demand. So everybody, before I get into the video, I released a individual report on a company I'm going to be pulling the trigger on next week. I made that report free to everybody. It's typically only available to our premium subscribers. I decided to release this to everybody so you can grab, some of the research, some of the commentary we're providing to thousands of Canadians. You can grab that absolutely free down in the description below. And as always, like the video and subscribe to the channel. Comment down below, what do you think is going to happen with this entire DeepSeek situation? Because I am very interested myself. There's new developments every minute. It's so hard to keep track of. And, there's a lot of forward uncertainty now with a lot of stocks that were trading at relatively rich valuations, and they're seeing a bit of volatility now. I mean, when we look to NVIDIA, we're seeing that big volatility as well. But let's dive right into the video. So pretty much the gist of DeepSeek, it was an AI model that was released on January 20th. And what it is, it's an open source model, which is different from ChatGPT in the fact that GPT is closed source. It's a premium platform where users have to pay to use it. With DeepSeek, it is available to everybody. You could take the code, you could modify it, you could do whatever you wanted to it. It's a lot more openly visible, and the chatbot interface is free to use, while the API, although they do charge for it, it comes at a fraction of the cost. Now, what was rumored was that the company only spent $6 million to develop the model, and it was supposed to be some side project they were doing. So they were doing, kind of a side project, and they ended up coming up with this LLM model that, just kind of kicks ChatGPT's butt, and it does so at substantially less cost. If we look to a company like Meta, they are forecasting $60 billion in AI-focused capital expenditures next year. So you have Meta doing something like this while this model comes out of China that only costs $6 million to build. Now, do I believe this? No. I don't believe this at all. I believe, the information is likely being fabricated a bit. And I do also believe that they're probably using a lot higher quality chips than they say they are. Now, one of the reasons for this is that the United States has significant trade restrictions on China to the point where they cannot get the highest quality chips. The United States does not let these companies sell to China. That doesn't mean that they can't get access to these chips. They would just need to do it in a bit of a different fashion, and in that case, they wouldn't really be able to publicly release that they're using them. So there's a lot of rumors there that the company is kind of keeping that under wraps. So effectively, they're saying that they're using around 2,000 NVIDIA H800 GPUs. This is a fraction of what other LLMs are using. I mean, you're talking 10, 15%. 20% of what the other LLMs are using. So if this information is true, it has significant potential impacts on data center demand. And what I want to go over when it comes to Capital Power and Hammond Power Solutions is the fact that they are heavily concentrated in this area. So when we think of Capital Power, this is one of, the largest independent power producers in Canada. It has North American operations. They have renewable thermal energy. They just recently closed down a coal power plant. They don't do that anymore. But overall, where this company was standing to benefit significantly was from the fact that Alberta was rolling out a significant development and, overall project for data centers in northern Alberta, and Capital Power would have been one of the main beneficiaries of this because it would probably have to supply a ton of power to those data centers. So Hammond Power, on the other hand, what they do, they typically provide dry type transformers and electrical components. So it benefited substantially from data center demand because ultimately, if we have a increase in the demand for power generation, transformers, electrical components, things like that, industrial applications, renewable energy products, things like that, Hammond is going to benefit significantly because this is the type of product it supplies. It's going to directly benefit from an increase in energy demand. And this is exactly why we see, we look back to 2022, the price was $12 and now we're at $107. I mean, before this big sell-off, we were looking at a 11 bagger in terms of price. So it has done very well. So when this news of DeepSeek came out, Hammond Power and Capital Power lost a significant amount of share price. We went from $125 down to around $107, what we're sitting at now. And when we look to Capital Power, we're down 17% since the news was announced. I'm going to tell you, 17% for a utility is a significant drop. I mean, when we look to Capital Power, they have a 5-year beta of 0.62. This suggests when the market moves 1% in either direction, Capital Power is going to move around 0.62%. So for it to drop 17% in a single day is definitely a huge impact for a utility that, to be completely honest, even at that price range, I didn't really find it all that expensive from a valuation standpoint. But there's a lot of news in regards to this that is driving these AI stocks downwards. I mean, when we look to something like NVIDIA, we're looking at a overall price drop of around 12%. It recovered a bit yesterday because of the news that it might not be as good as projected, and it might actually end up being a bit of a tailwind for data centers and current AI companies. But the one thing about NVIDIA is the fact that it does produce the highest quality, most powerful chips, but they are also expensive. And the one thing is, when it comes to the fact that the technology can be produced cheaper, it also might create a bit more competition on the chip production base, where companies they don't need to seek out the top end chips to get the highest power if they can produce these LLMs for much cheaper power, much cheaper chips, and overall just less cost, less capital expenditures in order to generate the same product as, say, a ChatGPT. So this does put a lot of pressure on NVIDIA. But the reason that I'm still relatively bullish on something like Hammond Power and Capital Power is the fact that as the technology gets cheaper, so typically you will have something very expensive. There's not a lot of areas where you can operate it profitably from a return on investment standpoint. So right now, this AI, I mean, like I said, we've seen Facebook dumping $60 billion into the infrastructure. What this creates, it creates a situation where it's very expensive for companies to maybe want to adopt a AI type product because they can't see profitable ROI. But as soon as something is produced cheaper, that will allow more companies to utilize something like this because they can do so at a profitable rate because the technology is cheaper. And ultimately, that leads to more adoption of the technology. And as a result, it probably leads to more data center development more data center production. Now, originally, a lot of people were kind of bearish on the data center aspect, but I do believe that adoption of technology as it gets cheaper, if this truly is, a path to being able to produce these LLMs and train this AI technology for much lower cost, that will open the market up to a much broader case of companies, which ultimately should increase data center demand, which should, in a way, increase the energy generation needed from Capital Power, and it should increase the, I guess you could say, infrastructure supplied from Hammond when we're talking transformers, other means to generate the power needed to fuel these data centers. So the one thing is I think the drop, it might be a little bit overdone here, but the only thing is there's so much uncertainty now. A lot of these stocks were priced to perfection. There is no doubt when we look to NVIDIA from a valuation basis before the dip, they were trading at, I believe it was, 62 times free cash flow. This is a substantial valuation. This is priced to perfection. There's no question about it. And now you add in that forward uncertainty when it comes to the company, like, maybe growth might not be as bullish moving forward as projected because of these cheaper LLMs where, possibly people could source out cheaper chips, which increases the competition on NVIDIA's front. Possibly there'd be lower short-term demand for NVIDIA's data centers, which make up a ton of its revenue now, a ton of its revenue growth, and a ton of its higher margin profile now. So we end up with that element where we just don't know. And as soon as you add forward uncertainty to something like this, people start to get really worried and people start to sell off stocks. So from a valuation standpoint, when we look to Hammond, it looks relatively cheap. I mean, it's trading at 14.7x forward earnings, but what I would say is this probably is not factoring in a potential slowdown in capital expenditure spend from the big tech cos on kind of the news of this much cheaper AI LLM being developed. Maybe they don't need to spend as much. And ultimately, if they don't need to spend as much, there's going to be less money going towards companies like Hammond. And ultimately, I would expect analysts to downgrade these estimates, and this forward earnings multiple will probably go up a bit. How much, I don't know. I would have viewed this drop as, I would say, appropriate, especially based on the news that we heard. I mean, again, you have these big tech companies that maybe now don't need to spend as much money on capital expenditures, on building out the infrastructure, things like that, which ultimately will impact Hammond's total demand over the short term here, which could ultimately impact its earnings. Capital Power is a little bit more difficult to project. I mean, we're talking about a company who is supposed to benefit substantially from that data center infrastructure, the supply of power to it, things like that. So again, if we have these companies slow down, maybe the need for power generation is not that substantial when they can, these LLMs can be developed on much cheaper chips, cheaper technology, cheaper power usage, and thus lower capital spend from a lot of these companies. So do I view the dip as appropriate? I would probably say yes. I mean, when we look at the run-ups of these companies, I mean, we look at Capital Power from June 19th, 2024, they went from a price of $40 to $67. So you're talking about like a 75% increase in a slow, low beta, slower growing utility. So it had a vault up in price. I really do think this is probably a healthy reaction to possible uncertainty in the future. When we look to Hammond, kind of the same thing. I mean, we're looking at 2024 prices, $77, went all the way up to $144. So we're talking about a near double over a very short period of time. So obviously the market is going to sell these stocks off based on the news. Would I buy them right now? I mean, it's so difficult to tell because you truly don't really know yet what is true and what is not true about these developments from DeepSeek. I actually tried to sign up and use the platform, but the popularity was so in demand when it was issued that they kind of told me that registration was shut down and I would have to come later. So I haven't really used it based on, and compared it to a ChatGPT. But the one thing I will say is with this industry being in its infancy, the AI industry, there is bound to be significant developments in this industry that is going to absolutely shake it. There is no doubt about that. And when we get to the point where these companies have ran up in price so much because of projected future growth, and then something comes and disrupts that growth, you're going to see huge corrections. And if you're going to buy these stocks, you have to be willing to accept that. I mean, I can look no further than if we look to BlackBerry, back when they were the dominant smartphone producer. I mean, the same kind of mentality towards BlackBerry was also utilized towards Nvidia. They're the market leader. They're never going to get disrupted. Their moat is just too big. And then what happened? Apple came along, Android came along, touchscreen technology, smartphone technology. BlackBerry kind of, stuck with that keyboard based, business type phone, and they ended up getting absolutely crushed. Now, I don't believe that this is the same for Nvidia. It's kind of a different situation because Nvidia is certainly adapting to the industry moving forward. But again, it's just kind of an idea that when we have an industry like this that is in its infancy, when it's very young, you can't get too comfortable with the holdings you have because it can change on a dime. And we've seen that with BlackBerry. That's kind of how I wanted to utilize that example. So would I buy these two options right now? Difficult to say. I would probably hold off until we had some sort of news regarding, one key element here is going to be big tech companies. They report earnings this week, most of them. I guarantee you they're going to talk about this on the conference call. They're going to be talking about DeepSeek on the conference call. They're going to kind of, probably give some sort of insights as to their forward spend when it comes to AI infrastructure. Because I guarantee you all these big tech companies were on this so fast it wouldn't even be funny to try and see. Because if you think about the amount of money they've dished out, if they could produce LLMs for much lower costs, that is a significant waste of money and will definitely impact their forward capital expenditure plans, which ultimately will impact these two. So I would say if I owned them, I'd be holding them. If I wanted to pull the trigger on the dip, I would probably be at best averaging in, because any new news, especially negative new news in regards to the potential future demand for data center infrastructure, will impact these two companies significantly, just like we've seen over the last week. So everybody, hope you liked the video. It was a little bit of a different angle here, but I've been getting a lot of questions on these two because of their huge drops over the last week. So I thought I would make a video on them. Let me know your thoughts. Let me know if you like this style of video, whether you're buying these two, whether you're buying any sort of AI company that's been impacted significantly over the last while. And remember, I produced a in-depth comprehensive research report on a company I'm going to be buying next week. You can get that down in the description below. It's absolutely free. It's typically reserved for premium subscribers, but the odd time I put out these newsletters, give them to everybody just for being loyal readers, loyal subscribers. And remember, like the video, head down below, subscribe to the channel, and we'll see you next time for more great Canadian content.